I'm Catherine Ross, and I'm here live from the floor of the NYC with Jim Cramer. Jim, what's top of mind for you this morning?
Well, look, I think that we were up a great deal yesterday and down a great deal today. And what I would urge people to recognize, sometimes like this, you have to do what my former wife, Karen Cramer, would do, which she said, let's just divide by 10, okay? So yesterday we were up 100, and today we're down 70. And I've always felt that that's great wisdom. She always had things that made it so that you understood not to get mesmerized by price, but stay with percentage. And I think people should keep that in mind, that if you wanted to look at percentages, you're up nicely. And I say that only because the lack of any sort of hope today is surprising. You did just eliminate the existential threat of a socialist at the head of the Democratic ticket. And that's worth more than just a one-day pop. I mean, I did feel that Bernie Sanders was going to win. And Bernie Sanders, a socialist at the top of the Democratic Party, what would seem the coup de grace of this moment, and it's been avoided.
Right now, we're down about 790 points on the 1002.
Use my thing.
Yes, exactly.
Karen's thing.
So based on your Real Money column this morning, you've said that stocks are trading outside of their core businesses now, and I'm wondering, has the market kind of lost sight of the fundamentals here?
Well, I think that you see Zoom was down when I got up, and now I'm getting up at ridiculous hours. Zoom was down a great deal. And why was it down a great deal? Because people thought it should be down a great deal. I mean, the articles were all about how the stock was down because it was down. There was a lot of what I call circular reasoning. So then I parsed the conference call, and I think that Eric Yuan, who's the CEO, is a gentleman, and I think he was unwilling to say the obvious, which is that people are using us because of the coronavirus, and we are making a lot of money, or it can expand because of the coronavirus. And he's too genteel an individual to say that, and so people were fooled. And the fact is he's doing quite well. Splunk, by the way, was doing well. Now there was a reversal from when I wrote the article, and that's, I think, it's a $25 billion company, so that could be the futures. But I think people have to start recognizing something I wrote in yesterday's Real Money, which is that we've seen the height of index. When it got to 60%, you have to say to yourself, can that many people be right as a way to invest? And I have always felt, unlike the doctrinaire S&P folks, I've always felt that you should own individual stocks and the S&P. If I could own individual stocks, I'm not allowed to. I would be buying individual stocks right now and betting against some others, because the fact is that when you look at Bristol Myers, that we're liking very much, Bristol Myers has zero economic cyclical kind of danger. Let's call it danger. And that should not be down as much as Caterpillar. Coca-Cola is actually something that I could argue does better. I mean, I'm sure that when we're done with this year, there'll be people who say, I felt better drinking Coca-Cola than I did drinking water. Why? Because when you're in hysteria, and unfortunately we're bordering on hysteria, you might think that the water is not as safe as Coca-Cola. So the idea that you would sell Coca-Cola is predicated upon nothing. Except for the indexation, which has made it so that you're getting bargains, but you don't feel like you're getting a bargain because we've all been brainwashed.
Now, when we're seeing such a volatile trading week, when we've got stocks up so much one day and so far down the next, should our investors be hopping on the calls with their financial advisors, or is it time to just wait and see till next week?
I think it's always great to talk. Because financial advisors, of which I'm very pro, having come from that industry, offer you a perspective. This is one of those moments where it's very difficult. If you're trading by yourself, what you might be doing is not being able to explain. I should probably do a piece about this. I've always felt that you should be able to say 3 reasons why you're buying or selling a stock, but what's happened, of course, is buying or selling stocks is no longer the issue. People are just trading index funds, and they're trading these ETFs that don't belong. Maybe an advisor could explain why it's not good to trade a retail ETF when there's some ETFs that are in the ETFs that are doing badly, some that are doing well. I do find the resilience, by the way, of a Walmart rather shocking here. Why is that at 114 and not, say, 98? I mean, one of the things that we have is a bizarre price discovery going on, where there are a lot of companies that could easily be trading. Kroger could be trading 22, could be trading 32. They're good numbers. but why not trade at 22, saying that the number's going to be bad? Why not have everything be like American Air? And the answer is that we have in times like this, we have a market that's actually not functioning. And it's not functioning because you've got the fundamentals of individual companies overrun by the way that we've been taught to invest, which is by index funds. And the index fund people are never going to admit what I just said. It's so taboo, what I just said, but I can offer 40 years of perspective that say, including, by the way, 15 years where there were no indexes, no index funds, that there are individual companies within the index that are doing well, and then there are individual companies that are doing poorly, and an index fund, therefore, is a poor way to invest right now. Remember, I know that is considered to be taboo, and there'll be people who index, or Warren Buffett, and that they just abdicate. And what I'm saying is that it's never good to abdicate unless you're so wealthy that it doesn't matter. And that's an important distinction. Rich people tend to not. Well, there's Enrique. Enrique, I'm going to give you an elbow, okay? He's Enrique Lores, who's a fantastic CEO and is doing a great job, and is under assault from a company that is reckless, that doesn't know the moment, and is not willing to think about maybe it was the time of Corona. Instead, they want to attack this fine man and trying to get him to be able to take down a lot of debt and buy a second-rate company. And I salute you for your courage, sir.
Thank you, Jim.
Absolutely. Absolutely.
Good to see you. That was Enrique, CEO of HP.
A man of great courage who recognizes that prudence is more important than recklessness. He's willing to buy back half of his company in order to demonstrate that he's got great value. He'll do it in a way that is not reckless. He's taking down debt to buy a company right now is the sign of not of recognition of what's going on in the country, and it's just a sign of greed. I know the people who are behind wanting to do this, and they're savage.
My dad works closely with Enrique, actually, so I've
Really?
met him before.
I
Yes.
didn't know that.
Yeah.
He's a gentleman, but let's just step back and say, you start with what's basically a hostile situation. You're trying to get bought, and then this outbreak occurs, and you don't stop. And that'll cause us to look back and say, wow, how much do people want to make money, bankers? And you just are wistful about it because you want to be able to say, we're Deus ex machina. You want to say that someone should come down and just say, you must stop. But they won't stop. And what drives them? What drives them to have the same stance to take over a company or to make that company by them before the coronavirus as after? And it's a company that's driven by rapacious bankers who have found the way to raise money. And we'll look back if that happens and say, how dare they? How dare they? But you know what? They look like me, wear suits. Maybe they have better, maybe they wear white shirt. I can't. White shirt, by the way, doesn't work on TV. They have cufflinks like me, and they use French cup, and they have expensive suits and more shine shoes than I have, but and this tie is not an expensive tie, but they look like me, okay? I've got skull and bones cufflinks. They talk like me. They know how to be sophisticated. They can sell things. I taught sales at Goldman, and they can do that. They can look and act respectable, even at a time of Corona. It's rather amazing. Rather amazing.
Let's talk about the coronavirus, but I want to put it in context.
Merck's up $2 since we started talking. Well, that makes sense. Procter was up $6 yesterday. It's only down $4. Some of these are very rational. Okay, see, I want people to understand. Procter may do better in this environment. They may do better. Merck will definitely do better in this environment. Regeneron, they've got a drug along with Roche that may work for it's lung infection that kills people. And they're doing trials right now. Len Schleifer doing a terrific trial, Regeneron, in China. So that you can get that hope, and that is hope. So we have to understand that it's not like everyone's sitting on their hands and saying it's inevitable, like what we had in The Stand by Stephen King, which is an excellent book. Certainly not to be read during this moment. But I think that we always have to look and say, okay, whose yield is good? I have American Electric Power, I have AEP. Nick Aiken's on tonight. Is his yield in danger? No, because people will still use power. So I think that you have to, again, de-S&P yourself. We've all been taught it's binary, and that's reckless. It's not as reckless as what Xerox is trying to do. Shameful. They'll, of course, say they're not shameful. No one who's doing something that's shameful is ever going to say it's not shameful. Wow. Hey, what I'm doing is good. I'm doing the Lord's work.
Speaking of the Lord's work, let's talk about 401ks, because we talked about that yesterday on the show.
How does it happen? I mean, honestly. And I like the people who are doing it. I like them. You guys are fabulous. You're not villainous. But you're not villainous people, but you're doing something villainous. Of course they don't think that. They'll probably think, wow, who is Cramer to say it? Who am I to say it? I'm someone who knows more than they do. Been around longer and understands things they're very nice young people.
So Jim, 401ks, let's talk about the older people. I do want to talk about younger people in just a moment, but talking about older people, if I'm nearly retired or if I am retired, fresh off of that, what's your key piece of advice for me right now?
You can get away from the rampant indexation and build with the help of a financial advisor, build quite a great portfolio of higher yielding stocks that have fabulous balance sheets. For instance, we did something that was very painful the other day. We sold Novartis, which is really has distinguished itself as doing a series of mistakes and blunders, and moved to J&J. Tremendous gain, actually, overnight. Of course, you don't have a gain if you don't take it, right? But J&J is AAA. And if it goes down, you can buy more. Alex Gorski's done a terrific job. And that's an example of something where if you had a financial advisor, you might be able to say, listen, not all of the S&P is AAA, but J&J is. And maybe this is one of those instances where if you don't have the time and inclination, you turn to a financial advisor, to a human who has worked hard all his or her life and might have some ability to help you. Not necessarily a chartist, but someone who actually is thoughtful and tells the difference between a AAA balance sheet and a AA or a single A. And that's important because there are many companies that are being sold right now that should be bought. And then, of course, obviously, if you believe that in the science and believe that there are some great minds that are working to try to cure this, like they did polio, which was in my lifetime, I think what would happen is you'd say, why did I give up on American ingenuity? Why did I give up on science? They can solve this. I like to think that the people at Regeneron and Roche may have something that eliminates what kills you. But against that, you have Dr. Gottlieb, who's a must-follow on Twitter, saying, look out, Washington. And I'm not in Washington, but obviously there are people who are that I follow, and they're talking about chaos and pandemonium in hospitals. And, are they going to call out the National Guard? I don't know. But there's tremendous uncertainty, and uncertainty people sell stocks. But then again, in the period that we've been doing this video, Walmart's up $1.
So let's Benjamin Button this. I'm now a young investor. I may not be in the market just yet. I might be in Robinhood, but haven't been able to trade. What should I do?
Well, that was disappointing. I wonder if they had been using IBM's cloud. Would have been better. I think that a younger person can take advantage of this chaos and build a portfolio of high growth companies that will thrive. I mean, I had my piece in Real Money this morning talk about Splunk. Splunk's Doug Merritt's doing a fantastic job. That stock really gets shelled, but we just found out that they're good. Look at Marvell. Young people, look at Marvell Technologies. I mean, they put together a portfolio that was supposed to not be ready, but is well ahead and is going to be the ultimate 5G play, and people want the ultimate 5G play. This is one where you can look at, young people can look at a company like Amgen, which I don't particularly like the management because I think it's undermanaged, but they have a cancer franchise that could be the best, and they got a freebie from when Bristol had to buy Celgene and had to sell something. Where you look at what Dr. Kafaria has put together at Bristol and realize, wow, now that's a senior growth stock, but you can put together a senior and junior growth stock portfolio that's quite extraordinary right here. And younger people, again, with the help of a financial advisor. It's very hard to do it yourself. Now, before electronic trading, it would be obscene to be able to try to pick these stocks without at least speaking to someone. And then obviously another gospel occurred, which is that we could get trading tools and pick stocks. And it's funny.
All right, Jim, thank you so much for joining us today and for all of your advice.
One last thing, Chevron, okay. Those who want high yield and don't care about principal risk, which I think you're foolish, but they should be drawn by Chevron.
All right, guys, we are now heading over to our Action Alerts Plus daily rundown show over on actionalertsplus.com. We are going to be talking about Marvell, so if you're a young investor and you're looking to add it to your portfolio, come on over with us. I'm Catherine Ross, and we'll see you tomorrow.